All right, so we're good to go, aren't we? I'm in the saddle.
Yep, and you have
All
1 hour. You can take it away.
Okay, beautiful. By the way, it's like 9:08. So am I good to 10:08 or am I good to 10?
You can just go. You can go the full hour. I don't mind running
I love
behind
it.
for you. Okay.
Okay, because I ask because you wind me up, and I just keep going. So here we go, everybody. I just want to say thanks for being here. I'm so excited about this morning. I get fired up by this stuff. I was up at 6 o'clock. It's 39 degrees in New York. I usually have 2 cups of coffee. I had a cup of coffee and a cup of hot chocolate instead. Walked out of the office, and we're strapped in and ready to go with the 3 big ideas for 2018. I am the founder and author of Bullseye Brief. What I do is pick stocks for people. I make them money. I have fun doing it. There's a little bit of education involved because part of the thing is not just picking stocks for you, but helping you understand my process so that you can do it yourself. And in fact, I always encourage people to reach out and give me a call if they have a question during the trading day. Because, that's part of the deal. We're all in this thing together. As Jeanette mentioned, we have to say there is a little bit of a risk disclaimer here because day trading, short-term trading, options trading, et cetera, et cetera, et cetera, we already know all this. There's a little bit of risk involved. That's okay. It's about balancing risk and reward. That's something I try to do as an investor, and I call myself an investor because I think I'm more of an investor than I'm a trader, though I did spend 20 years trading stocks, options, and oil at Merrill Lynch, Louis Dreyfus, ING, a bunch of different places. But you know what? We don't care about that. We just care about what we're doing today. So I want to give you my 3 big ideas for 2018. And here you go. Number 1, the economic explosion that is happening right now. Number 2, I want to talk about winners and losers because it's important, that we understand the process. And I'm usually pretty good. About 88% of my names are making money this year. But, every now and then those 12% kind of creep in there. So you got to acknowledge those. And then finally, why you must own these stocks. And by that, I'm talking about the 5 stocks you absolutely got to own for 2018. Plus, I'm also going to give you just my view on the one-tap market that is absolutely ready to explode. I'm real excited about it. It's one of my big themes for 2018. So why do I do this? In case you couldn't tell, I love it. I mean, sometimes I just get so excited, Sunday night, I actually want Monday to come around. My girlfriend thinks I'm crazy. My mother and my sister do too, but that's all right. We all figure out what we love and we do it. As I mentioned, I spent 20 years as a money manager, Merrill Lynch, Louis Dreyfus, ING. Believe it or not, during the financial crisis, I ended up going to Bloomberg as an anchor. So I don't know if my name looks familiar, maybe that's why. I was going on as a guest on CNBC and Fox. I was a Bloomberg customer, and they said to me, you're a Bloomberg customer. Why don't you put your content on Bloomberg? And so I did that, and then after about a month or so, they said, we've never hired an investor or a trader to actually be on air. Would you be willing to do that? I did. And so believe it or not, I took 6 years away from trading to anchor Bloomberg 3 hours every day. I actually loved it. And but I was antsy. So I left to found, is that even a word? I left to found. I don't know, but I just said it. I left to create Bullseye Brief because I just love being in business and helping people do what they do. I could only do so much of that at Bloomberg, obviously. All right, my personal story, I almost became a doctor. There I am, by the way, over at Princeton. It's kind of funny because my Econ 101 prof was a guy named Alan Blinder, right, the former vice chairman of the Fed. And one day after class, he said, "What's your major?" I said, "Well, I'm pre-med, so it's probably molecular biology." He goes, "Yeah, that's a bad idea. You're the only guy who comes up to me every day after class and asks questions. I think you like economics, and you should be an economics major." And it literally changed my life, that one conversation. I remember walking out into the courtyard of Princeton right in front of that big arch there where everybody's gathered during the reunions up there. And I was like, you know what? I'm going to be an economics major. I'm going to Wall Street. And here we are all these years later, never look back. Although it's kind of worth looking back to that sometimes, I'll be honest with you. I had a lot of fun there. So here's my process. What I look for in a stock. Number 1, a great fundamental story. Number 2, data, which supports my thesis. And number 3, a newsy hook, something that we are all talking about. Had I not gone to Bloomberg, I would never have appreciated that number 3 thing. When people are talking about stuff, that is powerful. And that becomes part of the catalyst that moves our names. I made people 30% in 2016 when I launched Bullseye. Last year was about 28%. And without those newsy hooks, I wouldn't have had those numbers. So great fundamental story, data which supports my thesis. That's very important. And then finally, that newsy hook, something, stuff we're all talking about. My process part 2, because you got those 3 things. Themes. Themes are incredibly important. My mentor of many years used to ask a question every time he interviewed someone. And the question was, how do you make the most amount of money on Wall Street? And the answer, according to Ed, my mentor, was find a theme and leverage it. And by the way, if you couldn't answer the question in some variation of that answer, you did not get the job. Fortunately, I did, and I got the job. And Ed basically taught me how to make money, which is now what I'm teaching you. This is what I do. My favorite themes right now, businesses with long runway. In other words, you stand at the end of a runway and you look down the thing, you can see a long way. In fact, you can see so far, you start to get those kind of, those things that, where it's like the heat coming off the runway and the jet fuel, whatever that is, the exhaust, and it kind of makes the thing vibrate. That's because you're looking so far down. So you want businesses with long runway. You want to be able to see that runway all the way down there. When great companies stumble, that's an important theme. I am not buying Facebook, FYI, on this stumble. I am buying GE. I bought Facebook in the past. I actually bought Wells Fargo on that big move down to 44. It made people a lot of money. Went from 44 to 66 in about 9 months. I have since sold it. Now Wells Fargo is stumbling again. I'm not buying it. There are plenty of other names. Like I said, I'm buying GE on the stumble. People think I'm crazy, but I'm not. I'll get to that. And then finally, another important theme, smart stuff. I'm talking about artificial intelligence, biotechnology, robotics, and 3D printing. Smart stuff. That's important. So these are 3 big themes right now that play out across my portfolio. I'm long about 50 names. I'm giving you 5 of them today. So the economic explosion, a very important theme that is guiding a lot of what I'm doing. It's why I love the banks right now. Bank America, absolutely love it. We're going to get to all that stuff. Why am I so bullish? The 2 E's of earnings and employment. Earnings growth accelerating from 8% last year to 18%. And by the way, if you look at the 51 companies that are reported in the S&P 500 thus far this year, earnings actually tracking at 30%. It's not sustainable. It'll probably come in, 18, maybe 20, 22% if we're lucky. But earnings growth, incredibly powerful. And that is because employment is soaring. Companies cannot fill jobs right now. Unemployment's down at 4.1%. The Fed says it's going to 3.9 this year, 3.6% next year. And given the fact that 2/3 of our economy is consumer driven, all that money percolates into the economy, which powers earnings. And that's the story. It's that linear. It's that obvious. The 2 E's of earnings and employment. People are employed. They're making money. They're spending money. That's driving earnings. Got it? The 2 E's of earnings and employment. That is why I am so bullish. Number 1. Number 2, because all the data, and again, I'm a data guy, all the data is pointing to growth. Look at this. Business optimism, consumer confidence, disposable income. They're all going up. There's consumer confidence practically at a new high. Small business optimism is at a new high. By the way, I don't know if you saw this past week, leading economic indicators, new high. CapEx, capital expenditures, otherwise known as CapEx, that's businesses out there spending money, new high. Household net worth as a percentage of disposable income, yep, new high. I know it's weird because sometimes it doesn't feel like that. We still kind of look back to 2008 and say, whew, man, that was so ugly. It was so bad. And every now and then, we sort of say, well, I'm working like harder than I used to work and 2, maybe 3 jobs. And so sometimes it doesn't feel like, it's 2006 all over again. But actually, if you look at the data, it really is. Household net worth is a percentage of disposable income. So I'm very bullish based on the data. I'm also very bullish based on the stimulus coming out of Washington. $200 billion in tax reform, right? $100 billion, it was actually 110, if you really want to dot the I and cross the T, of fiscal spending, $80 billion in infrastructure. I think that's ultimately what we're going to get. It was about $20 billion this year. It's 20 billion next year. So we're sort of halfway there. So much as I don't really like these guys and I don't think they work as hard for us as they should, that's okay. They did give us tax reform. They did give us fiscal spending, and they did give us infrastructure. So you know what? I'm going to give you guys a B. I'd like to get up to an A, but you know what? With tax reform, fiscal spending, and infrastructure, that's worth a B. So I'm obviously very bullish. I won't always be bullish. You know, it's not going to last forever, but it's looking pretty good right now. I just want to run you through the numbers again so we're all on the same page here, what growth looks like. The earnings for the S&P 500 will rise 18 to 20% this year. GDP, I'm going out on a limb. I was on Fox News earlier this week. I said that GDP is going to go to a 4 handle, and I mean it. Right now, GDP is running 2.9%. I think that what we're going to find is that by the middle of the summer, people are spending all that money. Thank you, tax reform. Okay, thank you, Congress. They're going to start spending all that money that they're getting back from the government that's theirs in the first place, and that's going to push GDP up to 4%. Unemployment, I think, as you know, I've said, is going below 4. So it's really the 2 4s: GDP above 4, unemployment going below 4. The Fed says it's going to 3.6 next year, and I think that's going to push the 10-year to 3.25%. I think inflation's also going to go above 2%. You see why you got to have numbers, right? I mean, it's just, you know, it's one thing for me to say, oh, I'm really bullish. You can say, well, yeah, that's great, Adam. Why are you bullish? This is why I'm bullish. I can only point with this tiny. Jeanette, we got to get me a bigger arrow because I'm so fired up. I want a big arrow so I can push this stuff. But whatever. I'm on an Apple MacBook Pro, so I'll use the little arrow for now. I'm very bullish. I like the numbers, all right? Winners versus losers. It's very important to talk about what you do well and what you don't because we learn from both of them. So let me just, I know, I get fired up, and Jeanette always says, Adam, just slow it down. We got all day, or at least you got all hour. This is how I do it, okay? Remember, write this stuff down. Great fundamental story, data which supports the thesis, and a newsy hook we're all talking about. Got it? Those 3 points. That is the Adam Johnson process. It's what I do at Bullseye, and it's what I want you to start doing for yourself. You know, I can find stocks for you, and I do. I pick them, and I help you make money, but I'm also real excited when you guys can start doing this for yourselves. And I know a lot of you already do, you know, so forgive me. I don't mean to, you know, tell you how to do what you already do well. I just want you to do it even better, all right? We're in this together. All right, Macy's. I love this. Buy the puke. Jeanette, I don't know how she found that emoji for me, the puke and smiley face. We've all been there. Macy's, buy the puke. Look at the surging volume down here on those sell-offs. Blah, puke, blah, puke, blah, puke. See the volume surging? That is a very powerful sell signal. People told me I was crazy just, you know, a few months ago when I was buying Macy's down here at 20 and then under 20. And I said, no, I'm not. This is why it's important to run the numbers. The value of the real estate on the Macy's balance sheet was greater than the enterprise value of the entire company. All right. So when I was buying and telling my Bullseye subscribers to buy Macy's down here at 20 bucks, we were buying effectively all of their real estate on sale for about 90 cents on the dollar, which meant we were getting the entire retail business for free. That's why you got to run the numbers. That's what I do. I do this stuff all day long, okay? And then I write it up in Bullseye and I make it easy. I say, you got to buy it here, and you got to buy these pukes. 1, 2, 3. I was buying all down here. And guess what? Look at that. My average cost basis, and when you're a Bullseye subscriber, I show you my cost basis. That's part of the deal, right? You know, you see me, my P&L. You're living and breathing it. We all are. It's you know, we're up 55% on Macy's, and that's since, you know, the fourth quarter of last year. It's only April. All right. If you can make 55% in 5 months, let's keep doing that all day long. Macy's, buy the puke. GE, on the other hand, is a puke, and I am puking over my P&L on this one. I'll be honest, I'm losing money on GE. My cost basis right now is, call it $18. All right. The stock Actually, finally, yesterday, I'm getting some love. I printed this out earlier in the week. It was $13.99. Actually, it got up to about $14.65 yesterday. So we're on the way back. Here's the deal with GE. And again, I've run the numbers ad nauseum. It took me an entire day. I looked at the 5 business units of GE. All right, I looked at the cash flow on them. And then I looked at competitors in the same businesses. And I looked at where they trade as a multiple of cash flow. I took that multiple, I multiplied it against GE's cash flow on each of those businesses, and then I added the 5 up divided by the number of shares and subtracted the debt, and I came out with a stock price. You know what it ought to trade at? It's up here. That's what GE is worth. $27 to $28 on the sum of the parts. And even if you write down the entire $31 billion pension obligation, sorry if this is in the weeds, but this is what you got to do. It's part of the process, okay? Even if you write that down, it's worth 24. So, I'm long at 18. Anyone home down here? Actually, yes. We learned people are down here. They are home because they were buying yesterday. So you see my point? It's getting up to $14.65. It's going to take a long haul. Jeff Immelt ran this company into the ground, but the new CEO is doing a fine job. He's bringing this thing back. Yeah, I know. I'm in the red here at 18, but worst case, it's worth 24. I think it's worth higher, 27, 28. You got to be patient. I'm not making money, but I really do believe that I will ultimately make money. GE, I am generally exhausted, but I am not without hope. That's one of my losers. I just got to get that off my chest. Now let's talk about a winner. This is so much fun. I love this stuff. I'm a former options trader, and I was banging this hard to all of my subscribers, all 2,000 of them last week, and a lot of guys made a lot of money, and I'm very glad about this. So one of my favorite tricks in my little bag of tricks is writing puts on a down day. All right, do you understand what that means, right? So if the stock is down 5 or 6%, well, I'll tell you what, I'm not going to make it. I'm just going to tell you what it really was. Trade 1, trade 2, trade 3. Google. It's the cheapest $1,000 stock I know. It's the most innovative company. It's growing earnings at 25%. They are in all of the exciting smart stuff businesses I want to be in. Artificial intelligence, robotics, search, that speaks for itself. Advertising. They're crushing Facebook because Facebook, does unspeakable things with our data. So I think you're going to see even more migration from Facebook into Google. Anyway, my point is, over the past couple of weeks, remember March 26th, 27th, that morning we woke up, Dow's down 600 points. Google got to $980, which I couldn't believe because it had been up here at 1060 just, 2 days earlier. So what do? I write the May 950 puts at $32, right? And that's what I mean. I write these out of the money puts. So the stock is trading at 980, and I go out to all my subscribers and say, guys, you got to write the 950 puts. Give yourself a cushion. The stock's at 980. Let's go down to the 950 put to give us just a little more cushion in case things get really pukey. And we're going to write those puts. We're going to sell them, all right? Which means that potentially we're a buyer down here at 925, right? Because 950 minus 32 means we'd actually be a buyer down at 918. Well, guess what? At 918, fine. I'll buy Google. Damn right I'll buy Google. At that point, it's trading at 21 times earnings, and it's growing earnings at 24%. So my point is, I wrote the May 950 puts at 32, along with a bunch of my subscribers, and then look at what happened. Over the next couple of days, it rallied, and what did we do? We covered those puts that we wrote, which is like shorting an option. We covered them at 15, all right? So we sold them at 32, we covered them at 15, we made 17. A couple days later, it's the gift that keeps on giving. They went back to 32, stocks up here, said, you know what? I can still sell a May 950 put, this time at $30, which would make me a buyer down here, again, with the stock up here at 1050. That's down $100. Sure, I'll do that. So I wrote them, all right? Stock cratered, and then it rallied back. And what did we do? We covered them at 14, up around in here, as both time decay took value out, and as the stock rallied, and they came back, all right? $16. We made 17 on that one, 16 on that one, and then we did it again. I mean, come on, it's the gift that keeps on giving. Trade number 3. right? We rode them at 22 on the puke, and then we covered them back up at 12. I mean, you see how this game is played? Let the stock trade down, all right? Write them at 32. It rallies back, cover them at 15. Let the stock get crushed. Write them at 30. Cover them back at 14 when it rallies. Stock gets crushed. Write them at 22. Cover them back at 12 on the rally. You see how this game is played? 1, 2, 3. We did that over, look, the space of 2 weeks, all right? I'm doing this. My subscribers are doing this. You can do this, all right? It's that simple. This gift keeps on giving. Write this down. This is how we do it. Great fundamental story, number 1. Number 2, data which supports the thesis. Number 3, a newsy hook that we're all talking about. Google is a great fundamental story. Data supports the thesis, right? It's trading at 24 times or 20 times on the puke and growing 25%. That's data, okay? And a newsy hook we're all talking about. Google is a winner. The market sucks, right? I mean, you know, sometimes it's that simple. I don't mean to sound cavalier, and I probably wouldn't have been able to say sucks when I was back on Bloomberg, but I can say it now, Saturday morning. I've had 2 cups of coffee and a cup of hot chocolate, all right? I'm fired up. Why you must own these stocks. This is the real meat of the thing, all right? Here we go. We got my action plan for 2018. Position for faster economic growth, right? You know I'm bullish because of the economic growth. We're planning for higher inflation. Oh, it's going to happen. The Fed's raising rates, and we are growing. We're going to get that 4 handle on GDP. We're going to get a 3 handle on unemployment. America's back to work, and we are embracing unique. Ooh, we don't want to go there. No, we're embracing unique opportunities for economic growth and higher inflation. All right, you ready? Here we go. Top stocks for 2018. Number 1, Synchrony Financial. Ticker is FYF. You know, I was talking about GE. This is actually a spinoff from the old GE Finance. This is the number 1 branded credit card issuer in the US of A with 39% market share. All right, they have 25% earnings growth. Ooh, I like that. Strong economy plus tax reform equals higher income. I don't know if any out there like to go to Dick's Sporting Goods, but I do. And I do not have a Dick's credit card, but if I did, I would be effectively putting money in the Synchrony Financial coffers. So here's how it works. Synchrony Financial basically writes, underwrites, creates, prints, services, on and on, all these branded credit cards. So that Dick's Sporting Goods credit card is actually issued by Synchrony Financial. I know it says Dick's on it. It's got your name and it's got the Dick's logo, but it's actually administered entirely, 100% by Synchrony Financial. This is their business. So when I talk about economic growth, when I talk about people being employed, what I'm really talking about is people out there spending all that money that they're earning and using credit cards to do it. And you don't have to carry a balance. I know some of us do. I hope that you don't. Pay off your credit cards, please. That's called prudent. That's another story. But my point is, Synchrony Financial is the beneficiary of all this stuff. And just so that you understand what I'm looking at, there's a chart. This is a great looking chart. I'm really not a chart guy. You know, I'm really a fundamental stock guy. I read earnings transcripts. I run, you know, some of the parts valuations. I do all the work that you don't have time to do, and I make it easy for you, okay? But I do also look at charts because I am kind of a, you know, visual guy. And I pull this one up just so that you can see we're in the zone. We're in the buy zone. And it's also upward sloping, all right, which I always like to see. So whoop, boop, 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 boom, comes back down, whoop, boop, 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 comes back down. Ooh, got real exciting. Probably a little ahead of itself, which is why we, you know, dip back in here. But we're in the zone as long as you, you know, maintain that trend. And, you know, it's real important. Being an options guy, I understand the, you know, I lived it and breathed it, this kind of sing-songy nature of markets. You know, we're never up every day. It'd be nice if we were, but, you know, we make money on the short side too, right? So you just got to, you know, you got to sing-song it, back and forth it, ping-pong it, as my mentor used to say. He goes, just ping-pong that stock, you know, play the, you know, whoop and then down, whoop and down. And by the way, with a core position, if I'm long let's say 5,000 shares of a stock and it runs, I'll peel off 1,000 shares. All right. Wait for it to come back down. I'll buy it back. That's fine. I may have a core position where I'm playing for a long-term capital gain. That's a long time, a whole year. But, every now and then there are names like that. Apple's one of them. I love Apple. I love Google. And then, with Google, I just added to it with the options. All right. Synchrony Financial, stock number 1. Let me give you another one. Ooh, baby. Bank of the Ozarks. I don't know if anyone here is, from Arkansas, but I know there are a lot of SEC fans out there. Jeanette, our host, I should say our hostess, is one of them. Nick Saban, by the way, I just got to say this because I do every webinar. Nick Saban, the greatest coach on the face of the earth, led Alabama to more national championships than anybody else. He's an Alabama guy. He's an SEC guy. And Bank of the Ozarks is an SEC kind of company. They're based in Arkansas, but they do business all over the Southeast, and they are an absolute powerhouse. Exceptional profitability is what you find at Bank of the Ozarks. Net interest margins, that's what NIM stands for. That's like a measure of, profitability for banks, NIM, net interest margins of 4.89%. That's the 6th highest in the U.S. The way they're able to do that, by the way, is construction loans. Because if you've ever, built a house or done work on your house, what typically happens is you go to the bank and they give you a construction loan, and because, it's not a completed house, it's a little riskier, the rate is a little higher. And then it rolls into typically a 30-year fixed or maybe a, 5-1 ARM or a 10-1 ARM, whatever. Anyway, the point is Bank of the Ozarks has a lot of construction loans. And if you've been around, the Villes, Fayetteville, Louisville, Nashville, Jacksonville, the Villes are hot. That's where the construction is. And that's where Ozark is making loans. They may also make 1 to 3 acquisitions per year, so they've got kind of built-in growth. And George Gleason, the president of this company, is a freaking animal. I love this guy. He's been running this thing since the late 70s, and he's just got it so well oiled, and he's so good at integrating all the banks that he buys. So you make 1 to 3 acquisitions per year, you get them on the same technology platform, you integrate them, and you go out and you make loans to growing businesses across the whole Southeast. By the way, we're going to be watching football in just another 4.5 months. It's a beautiful thing. Top stocks, there it is, the chart on Bank of the Ozarks. And this one is a big ping pong name, but in other words, you get these run up and then down and then run up and down. So, you can trade this thing. We like that. We like volatility here in the house. So very solid. Every time you get down to this trend line, boom, 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 you buy it, because then you get the acceleration. Bang. Comes back down. Boom, you buy it. Bang. See how the game is played? And when I say solid and accelerating, this is what I'm talking about. That little line there where the slope changes. You can go back and you got the long, steady slope. And then in mid-217, the slope changed. It started to accelerate. I like that. So on pullbacks, I'm a buyer of Bank of the Ozarks. Absolutely love this. I love George Gleason. I love the SEC. And I do love Alabama, Jeanette. Number 3, top stocks for 2018. The Western Claymore Tips Fund. The ticker here is WIW. So just so we're all clear, and I know a lot of you guys already trade this stuff, tips, Treasury, Inflation, Protection, Securities. What's so cool about tips is they're basically like treasuries, like government bonds, right? Except that instead of redeeming at par, because most bonds redeem at par or 100, they actually redeem higher. As inflation goes up, par goes up. They just keep adjusting the thing higher. So from 100 to 101, 102, 103, 104. What's that movie, Spinal Tap? But the volume goes to 11. Why don't you just make 10 louder? No, but the volume goes to 11. It's like same deal, right? The tips. Par just keeps going up. Goes from 100 to 101. Well, okay, fine. As inflation rises, tips rise. What I like about this fund, the WIW, is it trades at a 14% discount to the net asset value. So in other words, this fund goes out and buys tips. It puts them in the fund. The leverage is about 1.25%, and it trades at a slight discount. I do not know why it trades at a discount. I'm a smart guy, but I cannot answer that question. All I know is It's a discount. And when something trades at a discount to the NAV, you buy it, right? It yields 3.8%. Oh, and by the way, it pays a monthly dividend. So for all you folks out there who like to see money come into your account, that would be you, me, and everybody else, you see it come in monthly, which means your return compounds that much faster. Because remember, whenever we get a dividend, we reinvest it. We never let it just sit there in cash. We put it to work. We're all about work here at Bullseye. Take a look at this chart. I think this thing's about to explode. Momentum is building, right? Look at the support line that goes back to, early 2016. And it's just been sideways, starting to go up. This thing pops, and we know it's going to pop because the Fed is going to raise rates at least 3 times this year. They're actually divided right now, 12 versus 12 on the FOMC, the Fed Operations Committee, or whatever that FOMC stands for. 12 versus 12 as to whether it should be 3 rate hikes or 4. I think it's going to be 4 because we're going to get the growth acceleration as people spend the raise that they just got, and that is going to push inflation up. It's going to put rates up, and it's certainly going to move our little WIW higher. All right, number 4. I can do this all day. Junior gold miners, GDXJ. They are levered to the price of gold by 3 to 1. In other words, for every $1 move in the price of gold, you actually get earnings accelerating by a factor of 3. All right, that's operating leverage. They're levered to higher inflation, right? Because as inflation goes up, gold goes up, and they're levered to population growth. Because remember, 55% of, oh, I just heard someone's voice. Somebody there? Maybe that's just me being excited. They're levered to population growth. 55% of gold demand is from jewelry demand. So as the population increases, by definition, you're going to have more demand for gold. And again, on inflation, it's real simple. Just look back at a chart. Every time inflation accelerates, gold accelerates. And then, because these are the miners, they have that operating leverage. If you already have a hole in the ground, you already have machinery, you just run it, and as the price of gold goes up, you're still pulling the same amount of earth out of the ground, the same little flex, but now all of a sudden you're getting more for those flex, right? That's called operating leverage. You've already spent the money on the equipment in the mine. Operating leverage, 3 to 1. That's why I like the GDXJ. I also like this chart. Look at that puppy, right? Is that a beautiful thing? This is coiled like a spring. I keep waiting for that breakout. Vroom, vroom. Ooh, are we going to get it? I really do believe we're going to get it. Top stocks for 2004. GDXJ is my number 4. So I know I'm throwing a lot out here. I also know I'll talk fast. I know I'll get excited. So I think it's important sometimes to just hit review. And by the way, I can definitely hear some action in the background. So if someone has an open mic, just hit mute, unless you want to hit mute, which I understand. Sometimes I get carried away. But my point is, I just want to I want to keep everyone on the same page. I want to make sure everyone can hear. What I look for in a stock, a great fundamental story. You're starting to understand my process here, and you can do this. This is your process too, all right? I'm sharing it with you because I want you to make money too. I'm here for you, and that's why Bullseye's here. But, I also want you to be able to do this yourself. So a great fundamental story. That's what I look for. Data which supports my thesis. Obviously, I'm a numbers guy. You're getting that through and through. And then finally, that newsy hook we're all talking about. In the case of gold, right, it's inflation. I mean, you see this? It's not that hard. We can make money. We can do this thing together. If you can afford a Starbucks latte for $4 a day, guess what? You can actually afford Bullseye, all right? And that's my whole point. I'm trying to make investing easy for you. I'm also trying to make it affordable, all right? Because it doesn't do me any good if I do all this work and we're not doing this together, all right? I want you in the clubhouse, and I want to make it affordable so you can come into the clubhouse. And then once you get here, I want to make you money so that you like being in the clubhouse, all right? I also hope you like me, but, I know I have to make you money. That's objective number 1, which is why I'm getting right to number 5, Square. This is the cheapest backdoor to Bitcoin that I know. Why go spend thousands of dollars on Bitcoin when you can buy Square for around 50 bucks a share. They have this beta test right now for trading crypto, and it's absolutely beautiful. I don't do Tinder. That's not my thing. I got a girlfriend, and she's great. But if I were single, I would use Tinder because I like the elegance of swiping right or swiping left. And that's exactly what they do on this beta test for trading crypto. If you want to buy crypto on Square, you swipe right. If you want to sell it, you swipe left. It's really beautiful. So it's actually becoming a proxy in many ways for Bitcoin. They're doing so much at Square. Payments, payrolls, transfers, money transfers. They're like the new PayPal or Venmo. They're now making loans, so Square is becoming a bank. This is what Facebook should have done. Instead, all they wanted to do was sell our data and give us likes in return. Please, I want money for my data. Facebook should have done banking. Square is smart enough to realize that they have that opportunity. Imagine if they created Facecoin. I don't mean to bust on Facebook, but you know, it's just so easy. And obviously now trading. So payments, payrolls, transfers, banking, trading. This is like the new finance company, Square. And by the way, I should have said this right off the bat. You probably know it. If you've ever gone to, you know, like a little kind of mom and pop bakery and they use an iPad to, you know, for their cash register, and they have that little white square in it to swipe your card, that's Square. They make that little white square. You know, it's a very empowering business, right? I like that. You know, help mom and pop make money. Put the square in the iPad, now all of a sudden you're a cash register. I think that's beautiful. That is empowerment. That is America. And by the way, Square has got 70% earnings growth. Let's just take a look at this chart. Whew, that is beautiful. Rock solid support. Again, I'm not necessarily a chart guy. I look at companies and numbers, but when you see a chart like that, you cannot resist. 1, 2, 3, 4, 5, 6, 7, 8, 9. Did I count too many? No, it was only 8. Okay. But anytime it goes down on a support line like that, you buy it. Did you see yesterday Square was up 85 cents as the Dow was down 200 points? That is called power. Square closed yesterday at 51.46, up 83 cents. When I give you quality stocks, that's what I'm talking about. Stocks that are up 1.5% in a down tape. All right, that's what you get when you come to Bullseye. And you know what? I'm just in a very giving kind of mood. Tomorrow's my birthday. So I'm going to give you a little bonus here. The one untapped market that is ready to pop. In case you couldn't tell, I get excited about themes, all right? And I want to give you this one right now. I want to talk about exponential growth, okay? And the best way I can think to illustrate this is just a lily pad on a pond. Lily pads reproduce very quickly. In fact, they double overnight. So if you start on day one with a pond that has just one solitary lily pad, that one lily pad, let's say, covers only 1/1,000,000th of the surface of the pond. But on day two, there'll be 2 lily pads. And on day 3, there will be 4 lily pads. And on day 4, there will be 8. All right? What I'm talking about here is exponential growth. By day 20, that one lily pad will now have multiplied so that the lily pads cover 1%. And you say, only 1%, that's nothing on day 20. Well, guess what? By day 30, they'll cover 100%. So on day 1, that one lily pad right there covered 1/1,000,000th, and 30 days later, the lily pads covered the entire pond. That is exponential growth. And that is what we are tapping into when we talk about electric vehicles. All right? This thing is so exciting. You have to know about this, and you have to play it. And because it's my birthday, I'm giving you this bonus, and I'm going to give you stocks to buy, like Albemarle, right? The largest lithium maker that supplies batteries. FCX, the largest copper miner. And just so we're clear, an internal combustion engine has 50 pounds of copper in it. An electric vehicle engine has 200 pounds of copper in it. See what I mean? Exponential. It's accelerating. Mercedes, they're going to have an EV option on every model by 2022. Land Rover, ditto by 2023. Nissan, Volkswagen, Ford, General Motors, Volvo. I mean, it's amazing. Everything is going EV. And if you say, oh, but Adam, like I've already missed it, I would say, no, you haven't. 1%, and this is the whole reason I went here with the 1/1,000,000th versus 1%. We're right here right now, okay? 1% of the vehicles in this country that are sold are electric. All right? This is like day 20. So by the time we get to day 30, it'll be 100%. My point is, if you think you've already missed the electric vehicle bandwagon, you have not. Because when exponential growth accelerates, it happens so fast, it'll rip your face right off. Look at this. Okay, this is like the stuff I look at all day long. And you look at this and you're like, dude, there are way too many colors there and too many shapes, and I don't possibly understand it. Don't worry, I understand it. The point is, this is lithium supply, okay? This is lithium demand. And demand is rising faster than supply. In fact, this dotted green line here, I think that's actually too low. I think it's really up here. And the whole reason is that people are underestimating the demand for lithium, which you need in batteries for electric vehicles. They're underestimating the demand that's coming from buses. I mean, a lithium-powered bus has 8 times the lithium of an electric car. All right? So the fact is, there is so much demand out there that people aren't even realizing, and that's why I'm talking about the exponential growth that is happening right now in electric vehicles. These are all kinds of bonuses I'm giving you. I mean, my little basket, I got my Bullseye subscribers into a basket of little $2, $1 at one point, Canadian lithium miners. You know, the tickers were LAC space CN, LIX space CN, AAL space CN. I hope you're writing these down. I got people in when they were trading at like 80, 90 cents. They're now up at $2 and $3. That's what we do at Bullseye. We make people money. Exponential growth, electric vehicles. It's such a powerful theme. Top stocks for 2018. All right. I'm trying to make this easy. I know it's not easy, but you know, the fact is, I've got a lot of people who follow me. I've got subscribers in Argentina, Australia, the Bahamas, Canada, Dubai. Why? Because they enjoy making money. My point is, no matter where you are, I don't care what country you're in or what type of trader you are. Are you a fast money guy who likes to make money overnight? Are you a swing trader that likes to make money over a couple of days? Or are you more of an investor where you like to make money over a couple of, I was going to say weeks, but it's really months. That's okay. There's a place for all of you. My bottom line is that I am trying to help you see trends in the market long term. I'm helping you see opportunities short term like Google. All right. So we're reaching all around the world and we're helping all kinds of people make money. I absolutely love this business. So here's what we're doing. We're basically unpacking the market as we figure out together how to make money in stocks and options. I'm actually going to be running a 2-part webinar. The first series is going to be next Tuesday, April 24th. I'm so excited about it. It's going to be at 6 o'clock. That's part 1. And then part 2, because you know you can only digest so much information, is going to be 2 weeks later on May 8th. I'm going to record it so that if you can't be there that night, don't worry about it. You can actually play it, you know, when you have time. And if you sign up for this thing, Unpacking the Market, I'm going to throw in, because like I said, tomorrow's my birthday and I'm feeling generous. And Jeanette said to me, Adam, just bundle all this together and, you know, make it easy for people. Give them a $500 value for $97, you know. And I said, Jeanette, that's a good idea. I think I'm going to do that. So as part of my webinar where we're unpacking the market, where I teach you how to do what I do, I'm also going to give you 30 days of free access to Bullseye Alerts Pro. That's what my 2,000 subscribers get. You know, they get this thing and, you know, God bless them. I love having them in the room because we all figure this stuff out together. I give them 6 top picks every month. It's really 3 picks every 2 weeks, right? Because you got to kind of spread it out. I tell you where you buy it. I tell you where you sell it. And by the way, just so that in case I'm wrong, because as I said, 12% of the time I'm wrong. 88% of the time I'm right, but 12% of the time I'm wrong. I also give you a stop loss. It's very important to manage our risks. You know, we don't want to let a little loser and become a big loser. So 6 top picks, my weekly roadmap for the week ahead. I give that out on Sunday night. I give you my bullseye view of stocks, bonds, crude, gold, and the dollar. Even though I'm a stock picker, I think it's important to have an overall view of major asset classes. And then I give you a live monthly coaching call. That's a lot of stuff. No wonder it's $500. But again, tomorrow's my birthday. I'm feeling generous. And so if you join my webinar, two-part webinar, the first one's Tuesday night, next one's 2 weeks from then, you're going to get all this other stuff too. $97. And by the way, this offer expires tonight at 10 o'clock. That's 10 o'clock Eastern time. I'm in New York, so I made it Eastern time. I know Jeanette is down there in God's country, Alabama, Mobile, but which is an hour earlier. But 10 o'clock Eastern time. So think about it, but don't think too long. You're getting a $500 value for $97. Unpacking the market, how you make money in stocks and options. Here's the course outline, just so you understand how it's going to work and why I'm splitting it up into basically modules 1, 2, and 3 on April 24th, and then modules 4, 5, and 6 on May 8th. How to scan for the best stock picks. I run all kinds of screens on my Bloomberg terminal to try to find names, whether it's high cash flow, whether it's down and out, stocks that have gotten puked out, whatever. I run you through how to screen for stocks. And then some of the stuff that I use. Back when I was at Bloomberg, I talked to the smartest, most powerful, most successful investors in the world. They were my guests on the show every day. And what did I do? I wrote down all the stuff they do. And so I made that my own, and I share it with you. Best stock picks, how do we do it? That's module 1. That'll be about 20 minutes, all right? The next 20 minutes will be top fundamental strategies for all types of traders, whatever you are, short-term, swing trader, or long-term investor, fundamental strategies. I'm going to pick that apart. I'm going to make it real easy. And then number 3, pinpointing buying and selling with technical analysis. As I said, I'm not a technical trader per se, but I love charts for helping us understand where we buy and sell. That's very important. So all that's going to be Tuesday, April 24th. That's part 1. And then part 2, we'll do modules 4 through 6, right? Integrating options in your arsenal, using puts and calls like my Google trade, right? Where we went in and out of Google 3 times writing those puts. Beautiful trade. I made guys 50 to 70%, like overnight. That's insane. I wish I could do that every day.
Testing, 1, 2, 3.
Oh, somebody's testing. I hear you. And yes, sir, you're good to go. That was somebody else. I think that's our next presenter. And I'm not going to be a ball hog and talk forever because it's 9:56. So I'm going to wrap this up. Module 5, simple steps for shorting a stock. There's some basic ground rules that everybody needs to know. I want you to know them, all right, so that you can be more effective at shorting because we can make money on the short side. And then finally, total portfolio construction and risk management, because you know what? Even if you're a short-term trader, just in and out by the end of the day, you have to understand your portfolio in the greater context. Risk management is real key. So that's coming up. Again, 30 days of free access, 6 picks per month. My market roadmap on Sunday nights, it's going straight to your inbox. That's what we do. I make it easy here at Bullseye in partnership with TradeThirsty and Jeanette in Mobile, Alabama. Bonus number 1, I tell you what, I'm going to give you the dividend portfolio screener. I do this twice a year, December and June. I rebalance the portfolio. 6 stocks in the Dow Jones Industrial Average. You can't just buy the whole thing. There's 6 specifically. I tell you why, and then how you reinvest the dividends in a pre-tax account so that over time you more than double the return of the S&P 500. Yeah, everyone should be doing that. If you don't have a 401k, I'm very upset with you, but it's never too late. You can open that anytime and start funding it right away. I'll teach you how to reinvest the dividends. It's real simple how you set that up and which stocks you buy, and then rebalancing December and June. Again, that's a bonus. All right, I'm giving you that. Tomorrow's my birthday. I'm giving away presents in hopes that I get some presents back. And bonus number 2, Jeanette asked me, she said, Adam, you gave us 5, but usually people think in terms of like 10. I said, okay, fine, I'll give you 5 more. So bonus number 2 is going to be 5 more picks. So if you like the 5 I just gave you, I'm going to give you 5 more. Bonus 1 and 2, how to make money in your 401k, which I know everyone should have, or certainly will have by the time you get my thing. And bonus number 2, 5 more picks. That's how we do it. Market calendar, Unpacking the Market is my trading course. It's 2 parts, April 24th at 6, and then part 2, May 8th at 6. This is a whole new course. I've never done this before, and it's exclusively here on TradeThirsty. And by the way, this offer, all this that I'm giving you, $500 value for $97, It expires tonight, 10 p.m. Again, 6 picks a month. Over the next 30 days, you're going to get 6 new picks. You're going to get my weekly roadmap on Sunday nights. You're going to have my overview on the major asset classes, stocks, bonds, crude, gold, and the dollar, live coaching call, and then the bonuses, the dividend portfolio screener, and 5 more picks, $500 value, 97 bucks. I don't mean to sound cheesy like I'm selling, but you know what? I am selling, and this is a good value, and it expires at 10 o'clock tonight. So pardon me if I sound like I'm selling. I am, and this is a good value, and I don't want you to miss it because this is a unique opportunity. We're all growing together here. So you know what, Jeanette, I know I've taken up the whole time to 10 o'clock, but you said I could go a little later and take questions. So I don't know if I can see questions because I'm a little bit clueless when it comes to the, technology here. So okay, Jeanette, I'm looking at
I'm here.
And I can't, but you might.
Can you hear me?
If I do the drop-down thing, like I'm trying to hit the drop-down thing on the questions.
Adam, can you hear me?
I can hear you.
All right, I'm going to help you. Hang on. All right, let's see. Adam, Paul wants to know, do you recommend only stocks or also options?
Oh, both. Absolutely, Paul. Yeah, like the whole Google thing, I did a whole write-up on Google and then my trade, because it's important that you not only talk about the company and why you want to buy it or short it, but then you have the strategy. And I always, for my Bullseye subscribers, I always have a section at the end of it that says the trade. Buy here, sell there, or write this option, or on very rare occasions, buy this option. I generally prefer to write options because I like to sell premium rather than buy it. But yeah, Paul, absolutely. I go out very specifically on options. I tell you which one. In the case of Google, it was the May 50 put. Yeah. So hopefully that answers that question.
All right. Let's see. Okay, all right. 97, is that for, Wally wants to know, is that for 1 month or for 1 year?
That is for 1 month, Wally. 97 bucks. It's, if you add up all that stuff, it's worth, 500 bucks. And I'm doing it 97 bucks for, for a month. As I said, if you can afford a Starbucks latte at $4 a day, 4 times 30 is 120 bucks. I'm priced under, your daily Starbucks latte, which isn't even that good for you anyway. So yeah, I've tried to make this very reasonable. 97 bucks for that first month.
All right, Bart wants to know, he missed the cryptocurrency that you mentioned. What was it? Really, you were just talking about Square, right? Or were you talking about it?
Yeah, crypto. So it's funny you should ask because I've been amazed by how many people have been asking me about crypto. I did a really cool podcast with my old friend Corey Johnson of Bloomberg, who now is a strategist at Ripple. That particular crypto ticker is XRP. That's the one that everyone's excited about. I did this podcast. You can see it on my Twitter handle, @AJInsight. The thing went viral, Jeanette. I mean, it's gone around the internet so many tens of thousands of times, it blows my mind. So if you really want to dig into crypto, listen to my podcast. Again, it's posted on my Twitter handle, @AJInsight. It'll talk about XRP. If you're looking for a crypto-related stock, it's Square. The ticker is SQ. Closed yesterday, 51.46. It was up 83 cents on a down tape. And I like Square for crypto because they have this new brilliant, really elegant trading platform. It's like literally swipe right to buy, swipe left to sell. It's the cheapest way to Bitcoin I know. Square, ticker SQ.
All right. Do we get access to the recordings of those 2 course events if they sign up?
Yes, absolutely. Yeah. You better believe it. And you can listen to that on your own time. So obviously I'll be doing them live and there'll be questions live, which is important because, we're in this together and, I want to hear from you like what we're doing right now. But, if you can't make it, it'll be there on recording. You can listen to it as many times as you want. In fact, my first trading boss, guy by the name of Blair Bucciarelli, this is when I was trading oil at Louis Dreyfus, was trying to explain to me carry markets in oil. And I was like, what? And he goes, look, I'm going to explain how you buy oil nearby and you sell the futures against it out 6 months and you throw the oil in tank and store it. And by the time you get there, you make money. And I was like, I have no idea what you are talking about. And he said, well, that's the whole point. I'm going to explain it to you. You're not going to understand it. And next week, I'm going to explain it to you for a second time, and you'll start to like sound familiar. And the third time, I'm going to explain it to you, and you will get it, and then you are going to explain it to me. And that's the whole point. I want you to be able to go back and listen to these recordings as many times as you need, because eventually what I say will become yours. It'll be, those lessons will be yours, and you'll be able to do it yourself.
Hey, do me a favor. Go back to the slide that gives the layout of the product. Do you have one after that, or is there? Okay, all right, leave that there. All right, yeah. So there, that's good. That's fine.
Right.
Go to that
There's
last one. I mean, that last one's fine.
You want that one or the other one?
The very last one.
Okay. Right there.
All right, so yeah, so the questions are, okay, yes, you get a recording of those two events. It's $97 today, which gives you access to the course, lifetime access to the course, and then if you stay on with the alert service, then it's $177 a month. And so if you go to TradeThirsty.com/bullseye, it has all that listed on the form for you. What is your opinion on Amazon? Kenneth Gray wants to know.
Hey, Ken, or Kenneth, I love it. I think Amazon is an absolute animal. I am not long it right now, but I'm looking for an opportunity to get back in. It's one of those names you have to own. You know, I'm looking at my Bloomberg screen right now because I'm glad you mentioned this. It's 1527. You know, you get that thing, and on down days, it's very easy to take a name like this down $100. You know, you get that thing down around 1400. I think that looks quite good, but yeah, they're doing so much right. There's so much they control. I love Amazon. I just don't want to necessarily pay $1,527. In the same way, you know, with Google, when it gets up to, you know, 1080, I don't want to own it, but when it gets down to 1,000, absolutely, I write puts on it or I just buy it. I also, by the way, I'm going to give you a little bonus here. I love Apple. They're at risk right now because 20% of their revenues come from China. With all the headlines about, you know, China versus the U.S., it's taken some heat, but Apple's another core. And since we're talking the FANGs, I'm going to tell you I'm not long Netflix. I wish I were. And Facebook, no way, I'm not touching. I don't like Mark Zuckerberg. I don't like what he's doing. And until they figure out a way to pay me for my data, I'm not going near it. So that's the whole FANG thing, actually. I gave you more than you asked for, but whatever.
Okay, all right. Do you recommend any stocks in marijuana?
Oh, yeah. Zynerba, Z-Y-N-E is the ticker. This is a really cool company. It's a biotech. And they actually synthetically create CBD, which is the active ingredient in marijuana. They actually create it in a lab. So what's kind of curious about them is they don't actually grow the plant, which is a good thing because growing the plant is much harder. It takes a lot of time. You know, you lose the plant. They literally create CBD in a lab. They then suspend that in a gel, which you rub into your arm, and it, you know, is absorbed through the skin, and it's used to treat epilepsy, Fragile X, which is a type of autism, and potentially rheumatoid arthritis. They have 3 different trials right now. They're all phase 2 trials. Actually, the Fragile X just got fast-tracked by the FDA because, you know, if anyone out there has an autistic child, that's tough stuff, and we need to help these kids.
Look, one of my dear friends has an autistic child, and she's using CBD now, and this child is completely changed both of their lives. I mean, he's nonverbal, wild. I'm talking a runner, and CBD oil has really calmed him down. So
yeah,
it's a good thing.
Oh, that's so great, Jeanette. Well, Zynerba, again, ticker Z-Y-N-E, makes this gel that you rub into the skin. That CBD goes right to the receptors in the brain, and it's doing wonders for these kids with Fragile X syndrome. So, yeah, I'm really thrilled about it. We're going to get some good data, I think, probably June, July. Let me just pull it up here on my Bloomberg. So I think it's trading around $10. Yeah, 1056. It's right at the 200-day moving average for you technical traders out there. Yeah, I love this name. It took some heat because its epilepsy trial didn't show compelling data about 9 months ago. They're rerunning that trial, and knowing, I already spoke to the company, and what they found out, by the way, was that they had the dosage wrong. You need lower dosage over a longer period, which is like counterintuitive. So they're rerunning the trial. I think it's going to be quite strong. And yeah, Z-Y-N-E, that's my marijuana play.
All right, guys, listen, there's so many questions flowing in here, and we only have an hour. So, and we're time.
More. I'll answer.
Okay, I'm going to give you one more, but I'm going to tell them real quick before you answer the question. The way this offer works is you pay $97 up front. You get lifetime access to the course. If you stay on the service, which is the alert service, which comes with the coaching call and the picks and the roadmap, all that good stuff, it's $177 a month. So after 30 days, if you don't want the service, you don't renew, that's fine. You keep access to the course. You lose all the good stuff, which is access to Adam, where you can ask him questions like this during the coaching call. He'll give you his freaking phone number. I have discouraged him from that, but he does it anyways. Okay, so here's your question. This has been asked several times by Wally, so I'm gonna post it. Can you repeat the name of the lithium Canadian stocks that you mentioned?
Okay. Here you go, Wally. One of them got sold, sadly. I mean, it wasn't a sad day that, when it got sold, because I, tripled my money. AAL space CN is Advantage Lithium. This trades on the Canadian Stock Exchange. That's a $1 stock, AAL space CN. These are the guys down in the Golden Triangle in, Bolivia and Chile, where all the exciting stuff is happening. And then the other you want is Lithium Americas, and that is LAC space CN. That now trades at $7.09. We got guys into it. I got guys into it down at whatever, $1. Although there was a reverse split that pumped it up a little bit. I also like Albemarle, ALB. That's trading here in the U.S. They're the largest lithium miner in the world. ALB, that trades at about $97. So those are my lithium plays right now. I'm not trading SQM, which is the Argentine one. I think it trades. It's a weird name. It's like Societe Quinidad. I don't know, whatever. I don't speak Spanish. SQM. I don't trade that one.
But you're doing so well over there trying.
I'm trying. I do like queso though. I love queso.
And cerveza. What? Okay. Yep. All right. I'm posting Adam's link one more time for y'all. It's TradeThirsty.com/bullseye. And he's only leaving it up till 10 o'clock tonight. And so I'm going to post it. And then, Adam, always a pleasure to sit here and listen to you go 100 miles an hour. And that was like amazing. And I appreciate your morning and your dedication to TradeThirsty and our Saturday event.
Well, thanks, Jeanette.
Let me dismiss you. Don't log out. Let me dismiss you, okay?
Okay.
I want you to kick all my people out.
So should I do anything? Because I got to go write bullseye. I publish tomorrow morning, so now I got to.
Don't do anything. I am kicking you out. Are you ready? Hold. 3.
You're gonna kick me out like
2.
Adios.
I'm dismissing you. You have been dismissed. Bye.